Are you thinking of selling your condo or townhouse in New York City, but you have some concerns about the high mortgage rate environment? Well, I have some creative solutions for you to help you maximize the sale of your property that go beyond the usual agent suggestions. Why would a buyer buy when the interest rates are hovering around 7% for a mortgage? Well, because in New York City, the rental rates are very, very high. And those who are deciding to stay in the city for long term realize that now is a great time to buy a place for the long term because they can always refinance later. In the current market, if you're selling your condo or townhouse, you need to price it correctly. This is difficult. You really do want to make sure that you're working with a real estate professional who's very familiar with your market. And when they give you comps and discuss pricing, and you have an idea that is higher than the price they're recommending, really hear them out. It's going to feel uncomfortable. You're going to feel like you're leaving money on the table, but you're not, because your idea of the pricing was only ever that, an idea and not an offer. And your real estate professional who's been in the market day in and day out and getting the feedback from buyers and doing deals will understand the right price for your property. Now, you might be thinking one clever approach, if you have a mortgage with a low interest rate, would be to transfer that over to the buyer. Unfortunately, in New York State, that is not allowed. Mortgages are not assumable. But what you can do is transfer your mortgage balance over to the buyer's bank. Your bank transfers it over to the buyer's bank. Why does that matter when your interest rate doesn't transfer and they're still looking at a 7% interest rate? It matters because your buyer is going to pay a mortgage recording tax. And on a mortgage over $500,000, that mortgage recording tax is 1.925% of the loan. That adds up. Say your existing mortgage is $1 million. Your buyer needs $2 million to purchase your property. Instead of paying $38,500 in that tax, because you transfer that $1 million over to their bank, they would only be paying $19,250. That's a big savings to your buyer, and it might incentivize them to buy your property. Be flexible with your schedule for showing. This can be particularly challenging if you work from home, but the name of the game is to get as many people in as possible. And don't worry, you're not going to be overwhelmed. Everyone is used to looking at properties online. So the good news is if someone has requested an appointment to see your home, they're serious. There are plenty of places you can go to work for half hour. Go to the local coffee shop, you can go to a library, but do everything you can to make sure people get in when they need to. We talk about curb appeal in suburbs all the time, and that's really easy to understand. Your driveway, your front lawn, your front door, the plants. But what about the city? Do you have any control over that as the owner of a condominium? Not necessarily, but you might be able to influence the board or even do small things that can make a difference. For example, I know of one condominium in Harlem where they have beautiful tree pits with grates, but the grates were all chipped up and the superintendent was on vacation. So some of the owners got together before a listing went up and they painted the grates to improve the curb appeal. You can also reach out to your board, find out what plans they have to, say, spruce up the lobby, not a full renovation, but something small, and then time your sale accordingly. Pay down any assessment you might have in your building. Buildings have different philosophies. Some just increase the common charges when they know they have capital improvement projects to cover the cost, and others just do a special assessment. Now, if you're in a building where they do special assessments, the bonus to you is that when your buyer is looking online, they're seeing that your common charges are perhaps lower to a competing property. However, buyers get a little skittish when they get in the door. They start talking to your listing agent, and that buyer finds out there is an assessment. That always makes them nervous and gives them pause. They're concerned about how much is that? When does it end? Will there be another one? Now, if you pay it off, if it's a reasonable amount and not too much longer to go on it, then that makes you look like a hero because you care, and it builds trust before you ever get to the negotiating table giving you the upper hand. Share your listing online. Once your listing agent has had the professional photos done, has the website add up and all the collateral together, ask your agent for that information so that you can share it on your social media platforms. We never know where your buyer is coming from, and the more people that see it online, the better.